China-based sportswear manufacturer XiDeLang Holdings Ltd plans to raise at least 100 million ringgit from its upcoming initial public offering (IPO), says Director of Investor Relations Robert Lim. XiDeLang had received the Securities Commission approval to list on the main board of Bursa Malaysia, and its IPO was expected to be launched in September, making it the third company from China to list in Malaysia, said Lim. XiDeLang's managing director Ding Peng added that the company had chosen to list in Malaysia partly because China gives listing priority to state-owned enterprises. By listing on Bursa, companies like XiDeLang were also giving Malaysia investors a chance for exposure in the fast-growing consumer market in China, he said in a media briefing today. Lim meanwhile said XiDeLang intended to use half of the proceeds from its listing exercise to widen its distribution network and the promotion of its brand.
Half will be spent on advertising and broadening of our distribution network. I think the third is into the new facility. The rest are kind of working capital. I mentioned market research, sort of thing, relatively minor.
The company intends to double its annual production of sports shoes to about 10 million pairs by first quarter of 2010, with the completion soon of a new production center. XiDeLang has chalked up a 70% compounded annual growth rate (CAGR) in revenue to 275.4 million ringgit in 2008 from 95.6 million ringgit in 2006. Net profit over the period rose 47.4 million ringgit from 11.9 million ringgit. Of the total sales of 275.4 million ringgit in financial year 2008, 184.5 million ringgit, or about 67%, came from the sports shoe segment. The newer apparel, accessories and equipment segment contributed the balance 33%. XiDeLang carries a complete range of sports shoes, sport and casual wear, accessories and equipment including t-shirt, trackshirt, windbreakers, caps, bags and more.